stocks our strategists feel are poised to deliver positive returns are featured now in their top stock picks of the week.
A couple of very interesting choices for this week's top stock picks. Brian Bolin and Eric Dutram are here with me to favor us with a pick each. Brian, we're going to start with you. You chose Tyson Foods, and we were talking before the camera started rolling here. There's some negative news out on the wire about Tyson.
You know, Tyson will get that from time to time. The workers abuse the chickens, things like that. But when you think about it, like
apparently the workers are being abused this time around.
Well, you know, what goes around comes around, Terry.
I guess so.
Sometimes, you know, in the hen house when you're making some clucking noises, you might get clucked yourself. But I mean, those things come up from time to time, and then you know, animal rights. There's obviously the conditions for the workers as well. There's going to be talk that there's too many chickens in the hen house, or a fox in the hen house.
Yeah,
you know,
I think you're confusing your metaphors there.
My metaphors are all messed up.
I'm just letting them go.
Right. I'm being treated like one of those workers now. I see why they filed any complaint that they might have. But let's go to the website here, and we can see why I like Tyson. It's a Zacks rank number 2. It has a value and growth style score of B, momentum of A, clearly after the most recent earnings beat, and that gives it a VGM composite score there of A. I like the 16 times forward multiple as well. That's a pretty good premium, price to pay for a stock like this, considering where the market is normally at like 18 times. So you're just a little bit better than the market. And here I'm going to jump over to the price and consensus chart here. You know, as we look at an idea like this over the long term, everyone continues to eat chicken. We can see a nice jump here in the distance between the lines here, the colored lines. Each of those colored lines represents a different year of earnings estimates. The bigger the line and the gap in between, that's the greater amount of earnings growth. We can see that there's been great earnings growth here, and analysts are really looking for excellent earnings growth from 2016 to 2017.
So I just want to clarify, when you were running on there a moment ago.
With my metaphors, Terry?
You don't think that the news that's out on the wire about the workers being asked to wear diapers because they're being denied bathroom breaks is going to impact the price of the stock?
I don't think so.
Okay.
Yeah, and actually this is a surprise trader pick. It's up about 4% in the past week. I think this is more defensive play, and I think some of these issues are already kind of baked into the stock. Investors are looking ahead to the full year, and they're looking for more defensive names. I think this is a solid pick.
Yeah. Interesting. Thank you for coming to Brian's
Thank
defense.
you.
No problem. That's what I do.
I think they'll figure out how to get bathrooms to the workers, too.
Why don't you tell us about your pick? It's a REIT, right?
That's right. I'm looking at Mid-America Apartment Communities. MAA is the symbol here. They're mostly based in the southeast U.S. They have about 80,000 units in 15 states across the country. I think this is also kind of a defensive play. You get a nice yield that's about 3.2%. And if we look to the chart, we can see that the company has a pretty great track record when it comes to earnings. We can see they beat just in this most recent quarter. They had a beat by about 2 cents, and we can see that they haven't missed since mid-2014. And these lines, we can see that the earnings estimates are moving in the right direction. So some pretty strong growth in terms of earnings estimates. That's definitely something investors want to see. This is actually in the top 40% for the industry rank. We like to find stocks in the top 50% of industries. These tend to outperform the bottom half by a ratio 2 to 1. So that's always a good thing to find. And I like this space a little bit more than the retail REIT segment, just because we've seen a lot of issues with some of the stores lately. And if we look to this 1-month chart, we're comparing the S&P 500 to Simon Property Group, which is one of the biggest companies that deals with malls and those types of properties. We can see the black line here. MAA is a strong performer, up about 5% in the past month. S&P 500 down a little bit, and SPG is down almost 4%. And we can see much of the losses have happened in the last week and a half, 2 weeks, when all these issues with Macy's and some of the other big, Nordstrom's the other big one. A lot of big issues here. People are starting to question how much space these companies are going to demand in the future. And that's why I'm looking back to the real estate REIT segment instead. I think that's going to be a little bit safer play for investors, and I like that 3.2% yield.
All right. Own it?
I do not.
All right. Well, thank you both. Appreciate the time and the picks. And don't forget, if you want more information on stocks, commentary, other stock picks that are being written about, they're being written about on Zax.com. So if you're not there watching this video, get on over. You can link to all of that information right off the homepage. With Brian and Eric, I'm Terry Ruffalo.